Imagine you borrow $100. You promise to give it back next year. But when the year ends, you owe $118. You only borrowed $100. So where did the extra $18 come from? That is APR. And once you understand it, you will never look at a credit card the same way again. APR stands for annual percentage rate. Let's break that down like you're 10 years old. Annual means yearly. Percentage means out of 100. Rate means the speed at which something grows. So APR is the speed at which your debt grows every year. That's it. If your credit card says 18% APR, that means if you borrow $100 and don't pay it back, in 1 year you will owe $118. But here's where it gets interesting. That is not the whole story. Let's say your friend lends you $100 to build a lemonade stand. He says, "I want 20% APR." That means after 1 year, you owe him $100 plus $20, which equals $120. Simple. But what if you don't pay him for another year? Now you owe 20% of $120, not 20% of 100. That is called interest on interest. And that is where debt gets dangerous. Here is what most people do not realize. Credit cards do not usually charge interest yearly. They charge it daily. Yes, daily. That 20% APR is divided by 365. So every single day your balance grows just a tiny bit. It sounds small, but small daily growth over time becomes a monster. This is called compound interest. When you invest, compound interest makes you rich. When you owe money, it makes banks rich. Let's make this real. You put $1,000 on a credit card at 20% APR. You do not pay it off. After 1 year, you owe roughly $1,200. After 2 years, not $1,400, but more like $1,440 or more because you are paying interest on interest. Now imagine you only make minimum payments. That $1,000 could take years to disappear. And you could pay double what you borrowed. That is not a mistake. That is how the system is designed. Here is where things get sneaky. Sometimes APR is just the interest rate, but other times APR includes fees. For example, you take out a loan at 10% interest, but there are origination fees, processing fees, service fees. The lender rolls those into the cost. Now your APR might actually be 12%. APR is supposed to show you the real yearly cost of borrowing. But most people only look at the monthly payment. That is the trap. A car dealer says only $399 per month. It sounds affordable. But what is the APR? If it is 9% versus 3%, over 5 years, that is thousands of dollars difference. Same car, same price, different APR. APR is the invisible price tag. The monthly payment is just the marketing. There are 2 main types. Fixed APR stays the same. Variable APR changes with interest rates. If the Federal Reserve raises rates, your variable APR goes up, which means your debt grows faster. This is why people suddenly feel crushed when rates rise. They did not borrow more money. The speed of growth increased. Remember, APR equals growth speed. Now let's talk about the most misunderstood thing. 0% APR offers. It sounds amazing. And sometimes it is. But here is the catch. It is usually temporary. 12 months. 18 months. If you do not pay off the balance before the promo ends, the full APR hits. Sometimes retroactively. That is why banks love 0% offers. They are betting you will not finish in time. Here is a rule of thumb. If your APR is 20%, your debt doubles roughly every 3 to 4 years if unpaid. That is insane. Flip that around. If you invest at 20%, your money doubles every 3 to 4 years. Same math, different direction. APR is not evil. It is neutral. It just depends on which side you are on, borrower or lender. Wealthy people do not fear APR. They control it. They avoid high APR debt like credit cards. They negotiate lower APRs. They refinance when rates drop. They use low APR debt to buy appreciating assets. Average consumers focus on monthly payments. They ignore APR. They carry balances. They fund bank profits. The difference is understanding. So here is APR explained like you are 10. It is how fast your debt grows each year. If it is high, you are feeding the bank. If it is low, you are in control. And if you flip it and make it work for you, that same math builds wealth. The number is not scary. Ignoring it is. Now, every time you see APR, you will know exactly what it is doing. And that alone puts you ahead of most adults.